Another cautionary note about the state of Australia's property market. There are concerns that there are now too many off-the-plan apartments for sale in Melbourne's inner city and maybe not enough buyers. Until now, investors, including those from overseas, have been driving demand. But tighter lending guidelines, coupled with changes to stamp duty, mean they're pulling back. Emily Stewart has our story.
So here we are in the Docklands, one of the central hubs of oversupply in the Melbourne marketplace. We tell our clients to, obviously stay away from this type of asset class, just due to the fact that they're all the same.
There are 20,000 new apartments being built this year in Melbourne. They're concentrated in the Docklands, South Bank and the CBD, and many are sold off the plan.
They're still being built, and we're finding that investors and owner-occupiers alike are losing just due to the fact of the amount of supply that there is.
A BIS Oxford economics study found many built in the past 5 years have either dropped in value or seen no price growth. And even the very conservative Reserve Bank of Australia has weighed in, warning of a looming oversupply in Melbourne and Brisbane.
We're seeing substantial drops in value. The contract prices do not reflect the values that are coming in from valuers. And in some cases we're seeing drops of 40, 50, 60,000 before these properties have even been settled.
Some of the big developers are now using incentives to lure buyers, like free furniture, paying for legal costs and rental guarantees.
Well, developers are facing a perfect storm.
Investors have driven demand in the property market. Many are from China. But tighter lending restrictions from banks here and in Asia, coupled with the introduction of stamp duty charges this month, are already having an impact.
We've noticed that the investors have dropped off, but also the first home buyers have picked up. This project's 114 apartments over 3 pods. This project took 11 months to sell out, which is pretty well the average for our development.
Developer Martin Bridgman says while there's less interest from investors, there's still plenty of demand for their inner ring apartments. He says population growth of around 100,000 people in Melbourne each year is soaking up the vast supply.
We haven't noticed an oversupply. We don't build inner city apartments. We tend to build around the sort of inner suburbs, places where people want to live really.
But analysts say the boom in construction is slowing down, with building approvals peaking last year.
We're still purchasing properties and we're still applying for approvals, and we actually just got approval today for one of our properties in Abbotsford.
Real estate agent Robert Eggers from Dingle Partners specialises in selling CBD apartments. With many apartments selling via private sale, there are just 2 auctions being held in Melbourne today.
I'm here and ready. G'day Anton, how are you? Right, we'll just get all this set up. We've been very happy with the buyer response. We initially started with a range around 340, 370. We've now increased it up to 360, 390.
And with stamp duty scrapped for first home buyers on properties up to $600,000, new buyers are entering the market. Jennifer Dorwood's been looking to buy for 2 months.
I like it because it was built 1920s. I like the fact that the fit out has been done quite neutral.
So do you think there is an oversupply of apartments in the CBD?
The newer buildings, yes, and they're not. I don't think the quality or the spaces in them are very livable. They're very small and pokey.
Well, a Melbourne winter's day, but a wonderful winter's day in this magnificent city. 350, I'll take it. At 380, we now have it. 380 here. But at 385, it is wonderful buying at this price. Going, sold. The property is sold for $415,000. My congratulations, sir.
While this apartment sold well, there are concerns the market is turning. In May, ratings agency S&P downgraded all 23 second-tier financial institutions, saying the risk of a sharp correction in property prices has increased. And investment bank Citi warns the downturn in apartments will filter through to a 7% softening in house prices next year.
I think we're going to see significant price drops, and those price drops will be somewhere in the range of 10 to 20%.